Hey, Barry VonLobstein, mortgage advisor with Preferred Rate. Hey, do the headlines about LLPA changes have you upset, feeling like all the hard work that you've been doing to have a great credit score and save money are going to punish you when it comes time to get a loan? If so, I've got some information may set your mind at ease. First question you may have is, what is an LLPA? Well, it's a loan level pricing adjustment, and in essence, it's a fee to borrow the money that the FHFA, Federal Housing Finance Agency, imposes on all loans done through Fannie Mae or Freddie Mac, not FHA. I know all of the news articles and media have been blowing it up and calling it FHA. It's not. It's only applied to Fannie Mae and Freddie Mac conventional loans. So banks and lenders, when they gather loans and they sell them to Fannie Mae and Freddie Mac, they have these fees built in or baked in. They've always been there. It's just that they haven't changed since 2021, and they're changing as of May 1st. This was announced in January, but it's only made big headlines of late because it's getting ready to take effect. So now that you know what an LLPA is, well, who's impacted? Might actually be easier to tell you who's not impacted. So who's not impacted? Well, if you have a current mortgage that you've had for years, you're not impacted. If you're getting a new mortgage that closes before May 1st, not impacted. If you have a VA, FHA, or non-confirming conventional loan, you're not impacted. It's only conventional loans done through Fannie Mae and Freddie Mac. So it's only going to be an impact if you have a conventional loan through Fannie Mae or Freddie Mac closing after May 1st. So for those that aren't impacted, what is the impact going to be? Well, some people with higher credit scores that are putting more money down are going to see fees increase to borrow the money from what they were before. Other people, those with lower credit scores that are maybe putting less down, they're going to see their fees decrease after May 1st. The intent by the FHFA is to decrease the disparity between the amount to borrow money so that those not able to put down as much or with lower credit scores are impacted less to borrow the money. For example, if your credit score is 740 and you were putting 20% down, the fees were 0.500% of a point. Those are going to increase to 0.875% after May 1st. Meanwhile, if your credit score was 640, putting 20% down, previously it was 3 percentage points of a fee. That's going to decrease to 2.25%. On the heat map below, you can see that red equates to an increase in fees from what they were before May 1st. Green equates to a decrease in fees for what they were before May 1st. In summary, as you can see, the greatest impact is to those with credit scores between 680 and 780 who are putting 15 to 20% down. The greatest benefit is to those putting less down and those with lower credit scores. Doesn't mean their mortgages are lower, but does mean that they are getting a reduction in fees to borrow the money from where it was before. Still have questions on the best strategy or loan product for you? Contact me below.